Hi everyone, welcome back to the Accounting and Tax Help Desk. I'm Nima. I'm here to talk about the sales tax and the sales tax requirement. Sales tax is the state and the local taxes that impose at the sale of tangible or certain services. So, and it's very crucial for business owners to know how the sales tax works because they are the one who's responsible for collecting sales tax and remitting to the government. So let's break it down what the sales tax is. Sales tax is basically this consumption tax that it's imposed by state or local governments. It's happening at the sale of the point, means the customer pays that sales tax at the time of the sale. The you as a business owner collect those sales tax and remitting to the government. So it's not your money, it's not your sale, and it's not your cost. You're just the middle person, and you're the one to responsible. So if you don't collect it, you have to pay from your own pocket. But if you collect it, you're just paying as a middleman. You receive it and you pay it. Let's say you went on a date and you're looking forward to it and you're excited and you're planning on it. So you go on a date and you're planning, okay, I go on a date and pay this bill that you went to the fancy restaurant, I pay that amount. You went on a date, so your expectation is different than the reality. The date didn't go well. So it doesn't mean you don't have to pay the bills. You still have to pay the bills. So it's better to have a better date. It's the same thing. So you still have to collect the money. If you don't collect the money, you still have to pay sales tax. So it's very crucial to have a correct understanding of how the sales tax work, because if you don't collect correctly, you have to pay that amount from your own pocket. So sales tax happens at the, let's say who's paying it. The first thing is sales tax paid by a customer, not by you. You receive it as a business owner and you pay to the government. Income tax is paid by you. It's based on your profit, and then you have to pay it from your own pocket. Sales tax is a fixed percentage on the sales, and the income tax could vary and based on your business structure. It's based on your net profit. Sales tax doesn't have anything to do with the net profit. If you make zero money, if you're losing money, you still have to collect sales tax based on the sales. But income tax, you have to pay. If you don't make any money, you don't pay any taxes. So it's very important to understand what those taxes are completely different things, and who's responsible for paying those taxes. You're just responsible for collecting and paying to the government. You're a middleman in the sales tax. In the income tax, you're the one who paying the taxes. So let's see what triggers the obligation to collect sales tax. So you're, as a business owner, required to collect a sales tax when you create a nexus in that state. What is the nexus? Nexus basically means you have a sufficient connection with the state. And it's like any other connections, it's different kind of connection that creates nexus. Let's break it down. The nexus, what creates nexus? The first one and the most traditional one is like any other connection. It's a physical nexus, means you're physically present in that state. Let's say you have a store, you have an office, you have a warehouse, you have employees or contractors working in the state, or you have an inventory in that state. All of these make a physical and nexus in that state, and that's the most traditional way of creating a nexus in that state. You're responsible for collecting sales tax on the items that are subject to the sales tax. The second type of a nexus is sales volume, or that's triggered by sales volume or transactions. In certain states, even though you don't have a physical presence in that state, based on the volume of your sales, on the transactions, you create nexus in that state, and you're required to collect sales tax. Let's say, for example, you don't have any presence in California. you have a sales of 150,000 in California. You don't have any presence, but you still, because of your sales amount, you have nexus with California. You have to collect sales tax. You have to register with California and collect the sales tax. So the third way of you creating nexus is a marketplace nexus. Means you're selling through the third party like Amazon, eBay, everything. So that creates a nexus. Usually, if Amazon sells something on your behalf, they're the one who's responsible for collecting, and they do. They collect the sales tax, they submitted it, but that's your responsibility to report it. Let's say you sold items through the Amazon. Amazon collected your sales tax like 7,000, and they already sent it to the government, but you still have to report it on your sales tax return. Report it those, and let the government knows that you already take care of the sales tax. The fourth way of the nexus is affiliate nexus. It means that you have a partner or connection in the states. You use a marketing company to do your marketing in that states, or you use another company, another partner to help you with the customer service. That again creates a nexus. One of the other interesting ways to create a nexus is a click-through nexus. What does it mean? It means like if somebody like is an influencer in California, he's talking about your products in Instagram, and then based on that promotion, somebody buy those products. That creates nexus because that promoter is in California. Even though the person buy that product is from any other states and you're in other states, that creates a nexus. So let's say how you can determine how you have a nexus. So first thing first, let's see where you are. Look at your presence. You're here, you're in California, you have presence. The first thing, you have nexus. Keep track of your sales, volume, and transactions. It means if you have certain states, certain thresholds met, you have nexus. Check your activities with your affiliates and your marketing companies, and then at the end check with if you work with any third-party marketplace like Amazon or eBay. When you create a nexus, what would be the next step? So then you have to register for that state to be eligible to collect the sales tax. So how to register? You need to go to each state Department of Revenue. Usually most of the states help you to do that online. So you go to the Department of Revenue for that state, you fill out the information, EIN, you answer some questions about your business, and from that point they give you a sales tax permit, or they call it a pre-sale certificate in some times. So that from that point you are legally can collect the sales tax and submit to that state. Like for example, in your California, you go to the state of California Department of Tax and Fee Administration, and you register, and then from that point they give you account number, and from that point you have options to, not the option, you're required to collect the sales tax and remit it to the state of California. Sales tax primarily subject to the tangible goods, but a lot of other services and digital products are subject to the sales tax. So that's why it's very different in each state, in each city, and each type of service. So it has a lot of exemption. It's a lot of requirement for each categories in each city, in each even like a tax district. So it's could be very complicated. So you need to make sure you're aware of all of those things. So let's talk about what are those categories usually. So the first one is tangible goods, like say clothing, furniture, grocery store, and then your car, boats, your office supplies. So all of these tangible goods usually are subject to the sales tax. And the restaurant, prepared food, beverages, all of those are subject to the sales tax. Sometimes in different states, that's why it's very from state to state. Some digital products, if you download the software, some states are you're subject to the sales tax, in some states you're not. And then there are a lot of exemptions, like for example, we talked about the food, but in some of states, unprepared food are not subject to the sales tax. Uh, Clothing in some states might be subject to sales tax, might not be subject to sales tax. Some states needs if your clothes is under $100, you're not subject to the sales tax. So as you see, there are a lot of exemption, the different requirements in each states. Like medical supplies in most of the states are not subject to the sales tax. Educational materials are not subject to the sales tax, but again, in some states might be. Like for example, if you selling a loaf of bread in California, it's not taxable, but if you're selling a hot sandwich in California, it's taxable. Services, it's even more complicated because most of the time it has a lot of exemptions, and then a lot of times in each state is different. But some of the services that are usually subject to sales tax, the main one is home improvement. Home improvement, if you make construction, HVAC services, or personal services could be subject to self-employment tax. No, sorry, sales tax. Like for example, haircut. If you do the haircut, you're subject to the sales tax in some states, and some states do not. Cleaning services, especially commercial buildings, you're subject to the sales tax. And IT and software services, same. In some states, are subject to the sales tax. What services usually are not subject to the sales tax? Like the services we do. Accounting services, for example, in most of the states are not subject to the sales tax. Doctor appointment or legal services, these are the things that are not subject to the sales tax. Digital products is very different. In some states, downloading software is subject to the sales tax, and then a lot of states you're not required. So keep track of the sales tax as you see. It's very crucial because it depends on type of service, depends on tangible goods, depends on the city, county, state, and even the tax district has different rates. So you need to have like very dedicated system to keep track of sales tax. And let's break it down what we need to do. First, you need to have a dedicated system to keep track of the three main things: the sales volume, the amount of the sales tax collected, and where the sales happen, which district, which city, which um, location. Because the rate for each of these places, each of these items in each state is different. So you need to have a very dedicated system, like your accounting system. QuickBooks, you can have like a sales tax platform that is just software just dedicated to the calculation of sales tax. Each category of sales needs to be subject to subject to the sales tax needs to be separated with the applicable rates. So each you need to have a system that calculate those sales tax automatically and correctly. So let's say, for example, you have a sales in Dallas. So the sales happen in Dallas. So the first category of sales tax is state tax, like 7%. The second is county, is 1%. The third is Dallas, like another 5%, city of Dallas, and then there is a, for example, special tax district, additional 5%, 0.5%. So that's come up with 8.75%. If the sales happen in Austin, you may come up with the 8.25%. So you need to have a dedicated system to show sales categories, where the sales happened, and apply the applicable sales tax rate. The third thing, after you collect the correct sales tax, and submit it to the government, you make sure to reconcile those sales tax correctly. Means, okay, maybe sometimes you collected 5,000, 6,000. After you reconcile your books, reconcile your sales tax, you came up with 4,800. So sometimes you're collecting more than what you should, sometimes you're collecting less. So after you're reconciling, you know what your mistakes are, and then you can correct it with you filing your sales tax return. The other thing you need to make sure to consider the timely filing of the sales tax. In some states, it's quarterly, some states monthly. Some industries require monthly sales tax return based on your volume of the sales. So each industry, each state has different requirements for timing of the sales tax. Make sure you comply with those timing. Make sure you collect those sales tax and remit to the government timely. The one thing that you always need to make sure that sales tax is not your money. Sometimes when you receive the money from your sale, you're happy you're collecting that much money, but you forget that some part of this money is basically you have to pay it back to the government. You're just a middleman. So it's a good idea to have a separate account to account for sales tax, so you don't touch those amounts. You don't spend sales tax amount, because when it comes to the paying those sales tax, it could be very crucial to have enough fund. So don't mislead with amount of this money you receive sometimes, because some part of it you have to pay to the government. It's not your money. The most important thing to managing your sales tax is, again, not considering that money as your money. You need to be a middleman. You need to separate those funds from your fund from operation and don't count on it. So for example, if your item is $100, you sold that item for $107 because you collected $7 tax. That $7 is not your tax. Make sure that tax is calculated correctly. For example, you collected $7, but based on the accurate collection, you forgot some of the tax district taxes or some other correct rate for that city or location, and then the correct percentage would have been 8.5%. So you have to pay that 1.5% sales tax from your own pocket. So having a correct system, having correct calculation is very crucial to make sure you don't pay those sales tax out of your pocket. So that's very important that you have an accountant, you have an expert to go over your sales transaction, how the things are set up, how your rates are setting up. Because if you don't have a professional look at your sales tax, you may end up paying a lot of money from it out of your pocket. In this episode, we went over sales tax. As you hear, there are a lot of requirements, a lot of exemptions. There are a lot of rules. Different locations, different cities, different counties has its own rules. So it's very crucial, again, to talk to your CPA or accountant about sales tax. Thanks for listening to our podcast. Thanks for your subscription. Looking forward to talk to you soon.